Assalamualaikum and good afternoon. We will continue our discussion on the classified balance sheet, and we will now look into the current liabilities. So what do we mean by current liabilities? Current liabilities refer to obligations that the company has to pay within the coming year or its operating cycle, whichever is longer. So liabilities, by the name, you should understand that it is an obligation by the company. The company is obligated to pay some other party a certain amount, but when we call it as current liabilities, then the amount that we need to pay, we need to pay those amount within one accounting period, or within one operating cycle, whichever is longer. Okay. Usually list notes payable first, followed by accounts payable, and other items follow in order of magnitude. These are the normal orders, sequence of items in the current liabilities. Common examples include accounts payable, salaries and wages payable, notes payable, interest payable, income taxes payable. Okay. For example, when at the end of the year you will produce your financial report and send it to the inland revenue, okay, and when you send your financial statement, you will also estimate the amount of tax that you will be liable. When do you need to pay the income tax? You need to pay the income tax in the following year. So when your accounting period ends on 31st of December 2019, and you need to pay your tax probably in June 2020. Therefore, that liability is within 1 year. Therefore, it goes into income taxes payable under the classification of current liabilities. Okay, liquidity, ability to pay obligation. So when people talk about liquidity of the company, it is talking about how the company is able to pay the obligations that are due within the next year. So that is what we call by liquidity. Okay. So this is an example of a balance sheet of Marcus Corporation that shows the classification of current liabilities. Okay, these are the examples of current liabilities. There are notes payable, accounts payable, current maturities of long-term debt. Okay, they have long-term debt, but long-term debt that goes across multiple years. But some of those debts are due to be paid within 1 year. Therefore, the part of the debt which is need to be paid within the next year should be inserted into the current liabilities, but the remaining ones that should be paid in the subsequent years, that will be under the long-term liability. And then there's the other current liabilities, income taxes payable, salaries and wages payable, and etc. Okay. Then we have the next classification is long-term liabilities, which is obligations the company expects to pay after 1 year. So after 1 year, meaning that if we are preparing our accounts by if our balance sheet is on the 31st of December 2019, those that fall under long-term liabilities are only those obligations that we need to pay after 31st of December 2020. Okay, so which is beyond 1 year. Okay, not within 1 year of the balance sheet date, but not within 1 year of balance sheet date, but beyond 1 year with the balance sheet date. So for example, include long-term debt, deferred income taxes, okay, and other non-current liabilities.